Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. We are up 0.9% for the week for the S&P 500. So another new all-time high for the S&P. Now, pierce the Fibonacci levels that we talked about before, or last week, the Fibonacci extension. So that would kind of show you that the next target to the upside would be 6,800. The one caveat I would say to that is if we look here at the RSI, so look at the price up here. Okay, let me zoom in a little bit. There we go. And we can see the bigger bars. Okay, so look at the price up here. See how the price is going up, so down to up. And then we have the RSI right here is at 76, right? Then it falls back down and then it goes up. So now the price goes even higher. It makes a higher high, but the RSI right here makes a lower low. So that would show usually, you guys that have gone through the TA course, that would show that this is forecasting that it's likely that the price is going to roll over and go down. So there's a couple of conflicting indicators there, with the Fibonacci extension and the RSI here. But if I had to bet on it, I would say that it is more likely to go down, and I think we've reached an interim top here in the S&P 500. I'm not necessarily sure about next week. We might get another little push next week, but I think that coming here in the next weeks and maybe in the next month or so, I really feel like we're putting in a topping pattern here in the S&P, and the RSI is kind of forecasting that. In my opinion, if you look at some valuations, stuff like price to book, it's just Google price to book on the S&P 500 and look at it over time, and it's completely off the charts. So, but no one seems to care. So let's just run this train off the cliff here. Okay, off my soapbox. The dollar, the DXY, is down 0.4% for the week. So we got a little baby trend line right here. We need at least 3 points for a trend line, and we've hit all three right here. Kind of looking a little weak though. We do have this longer term channel right here that's definitely offering some support. But my money would be on the dollar going down next week. If we look here at the 50-day moving average and we got the 20-day moving average just above it, that's some pretty stiff resistance. I think this trend line will probably break before those moving averages do, and I would bet that the dollar would get a little bit weaker next week. On the other side of the coin, when I back this out and we go to a longer term chart, we can see a very long-term parallel channel here where this offers a boatload of support. So there is a real chance here that the dollar over the coming 6 months or so gets stronger. And that would not be good for the commodities that we're betting on, generally speaking, but definitely something to be aware of. But next week I see it getting weaker. All right, and the 10-year yield is up 0.9% compared to last week. Shot up a little bit. I would expect that it'll probably continue higher next week. The next form of resistance that we got is up here around 4.4%, maybe a little bit south of that, and that'll be the 200-day moving average. All right, and James says, thanks for making the price bars more readable. Really, really, really much more readable. You're welcome, James. MK says the same thing. Thanks, Steve. Those candles are nice and visible now. Yeah, okay. I just increased the size of a little bit. I forget I'm staring at like a 30-inch screen in front of me, and some of you guys are doing this on your phone, so it's probably a little easier to see the bigger bars here. All right, and gold is down 2.2% for the week. Last week I said it hit a new all-time high. I look at the futures market for gold. So this is basically like what's the price of gold if you got to take delivery next month, right? And these contracts roll over. And so I focus personally on the futures market. And maybe that's a mistake. I've just found it's easier for me to kind of predict which way the price of gold is going to go by looking at the futures market. This one's the spot market here. And you can see that this is almost a $50 difference, right? What is that, 47 bucks? So the spot price is $33.35. The futures price is $33.82. And so little tidbit here. If you guys have heard of contango or backwardation, contango means that the futures price is trading at a premium to spot. Backwardation means that it is trading at a discount to spot. So right now it's in contango, meaning that it's more expensive than the spot market, which I kind of look at as like, you know, a future forecast, kind of looking at the term price of uranium as opposed to the spot price. Anyways, looks to me that gold is got some pretty good support right here on the 50-day moving average, that blue line right there. Oh, let me do this while you guys are here and let me know if this is better, if I should have these moving averages bigger like that. Okay, so now you see these bars. Are the moving averages, do they kind of get in your way, or would you like to see them bigger? Okay, so we know the big bars are better right now. Let's do the moving averages, and you let me know if it was better before when they were a little kind of lighter, or let me know if this thicker line here is better and easier to see, and I'll keep them or put them back the way they were. Okay, so just let me know down in the comments below. All right, so it looks to me like gold might get a little bounce here. We got the 50-day moving average right underneath it. So I think it's more likely than not that gold will probably get a little bounce. I thought last week we were probably going to break through here. That didn't happen. So like my kind of like second run of the mill idea was that we'll probably get a little bit more of a correction for the next month or so, and then kind of have a V and come back up. And that's looking like it's going to be the more likely scenario. We might kind of grind sideways here a little bit, but basically what I'm doing is you just kind of take the time scale here, like middle of June, middle of July. That's kind of like a month time span. I could see it doing something like that here before we finally break out. But I'm pretty bullish on gold, and I think that's more likely than not going to be the outcome. In the next month or so, we'll probably break to a new all-time high. All right, and gold divided by the S&P 500. Gold underperformed the S&P by 3.1%. Thought that the 618 would hold, and it so far has held, looking like it's going to get caught right here by the 200-day moving average. So all this blue line is right here is just a Fibonacci retracement from the low to the high and back down, and it looks like that's being obeyed, lines up pretty well with the 200-day moving average. So if we're right about the S&P 500 topping out, even if gold goes sideways, this chart will go up. All right, and PHYS is down 1.6% for the week. So if you're new to the show, welcome, glad to have you. These red, yellow, and green lines, basically what that is, those are kind of our limit order buy zones. Okay, so if the price action gets down here to 25, that's your first limit order, right? If it gets down here to 24.25, that's your second limit order. And if it gets down here to 23 bucks, that's your third kind of stink bid, right? Like we don't think it's going to get down here, but if it does, it's a really good deal, right? And these percentages, 15%, 35%, and 50%, that's kind of like, let's say you wanted to bet $1,000, right? You do 150 bucks here, and you do 350 here, and then you do 500 here. As it gets cheaper, the deal gets better, so you buy more. Does that make sense? So look at those as we go through here, as we run through these to kind of give you an idea of where to place your limit orders, right? And then you can be at work or, fishing or whatever, and you don't have to be watching the price action here. You just put it in on your brokerage account and go, okay, I want, 100 shares at 25 bucks, and that's your first one, right? Okay. All right, GDX is up 0.4% for the week. So we had a massive breakout the week before last, kind of looking like we have a bit of a bull flag forming right here. So a little bit of up like this and kind of a cross like that, kind of a bullish pattern. I wouldn't be able to buy this right here because see how high the RSI is, and look at the MACD here. It looks like the MACD is starting to roll over just a little bit. So I couldn't purchase here, but I like limit orders here at $54.50, $50.50, and then 46 bucks. And moving on to GDXJ, the Junior Gold Miners ETF, up 2.3% for the week. So notice here, there is no real bull flag. See how we've got kind of the, it goes up like this, and then it's more than a 90-degree angle. So no real bull flag there. Although it is a pretty bullish looking chart, we're getting pretty high in the technicals here. I like limit orders around 68.50, 64 bucks, and then $55 is a stink bid. And now that I'm looking at that, I probably need to move it up. This should probably actually be around 58 bucks. That would line up closer to the 200-day moving average. Okay, and a note on the newsletter. So we got limited spots left for the introduction price. Anyone that signs up will be grandfathered in, and as long as you stay subscribed, your price will never go up. So I am very grateful and honored for everyone that has already signed up. So thank you. That's pretty cool. I'm honored that I get to do this, and I love doing it. And I had one subscriber write to me and ask me what was the difference. He signed up for the premium and he didn't know where to find it. So let me run through that here real quick. If you haven't done it, go to stevebartonmoney.com. On the home page, you can subscribe to the free newsletter right here, or just click on the newsletter and it's the only one there. That'll bring you over to Substack. When you get the newsletter in Substack, which comes out at 10 a.m. Pacific time every Sunday, the newsletter comes out, and this show comes out 9 a.m. Pacific time every Sunday, so right after Monday market moves. This is what it'll look like in Substack. So what you see right now is the free version, and over here is the kind of the chapters, right? So introduction, what we did for the week. All of this is free. Commodity snapshot, Monday market moves. If you don't have time to watch the 40 minutes of Monday market moves, we wrap it all up right here. Here's a link to the episode. Here's our technical analysis series that's been getting a lot of great feedback. If you're new to TA and you want to learn how to read the charts, this is where you start. Then we go over the interviews for each week, right? Okay, you can watch the full episode if you want, or just get the highlights right here. Same thing, we had Rick Rule, we had Doomberg last week, right? Watch the full episode. This is if you want to join the classroom, the free or the premium version. And in the pipeline, okay, so this is last week, so this isn't accurate. We're going to have Michael Oliver next week, but this is where you can submit your questions for the coming guests of next week, right? And this is where I put my final word, kind of like, just kind of wrapping up everything that we learned from the week, what I see happening. This was what I thought would happen with gold if it didn't break out, and so far it looks like I'm right. And all this is free. This was a little teaser video. And then here's where the premium version comes in. So at the bottom of the weekly newsletter, right down here, you've got a 40-minute video, or 38-minute video here on all the stocks that are in my personal portfolio, not the ETFs that I'm talking about on Monday market moves, but the premium alpha play stocks that I think will do really, really well in this commodity super cycle. And I go over those in here in this video at the bottom of the newsletter, just like Monday market move style, but having individual, often junior mining stock companies instead of companies like GDXJ. Okay, so you get the company specific stocks in that one. And I did a couple of flash updates during the week on little things that talked about Palladium, and did a flash update on Equinox Gold. They had their earnings come in and they jumped like 14-15% in one day. So that was pretty cool. Anyone that's a premium member can leave comments under here. And I love doing this. It's a lot of fun. So honored that you guys are signing up. And we've got a few spots left at the introductory price. And if you get in there, you'll be grandfathered in. Okay, and silver is down 1.3% for the week. I thought we'd be a little higher next week, but it kind of came back down, corrected, and closed the week a little bit lower, sitting just above this 50-day moving average, which has kind of been obeyed for a while. See how it hung around here, formed up a bull flag, then broke up. Kind of formed up a bullish pattern, and then broke up, and it's just kind of been petering out right here. Someone was asking me if this was a bear flag, so basically like this and like that. I don't really see that as a bear flag. It looks to me like it's just kind of consolidating. Until it breaks this 50-day moving average, I'm really not worried. Talking with Brian London last week, He really liked this $35 level of support. I do too. Like we'll use these red, yellow, and green lines here. If you're going to go buy bars and coins like physical, then I like these lines a lot for like physical purchases. And I agree with him. $35. I mean, it just lines up perfectly right here. I think that's a great entry point. I also like 33, which I think personally is probably the floor. And unless we get some kind of liquidity crisis or something, we're not getting down here to 30. But maybe we'll get lucky and there'll be some type of pretty radical washout and it'll get down there. Oh, and here's another example here. So this is the futures price of silver, right? $37.97.5. And here is the spot price, $38 and we'll call it 1 cent. So this is an example of backwardation, right? So the other one was contango. The futures price is more expensive. Backwardation, the futures price is a little bit cheaper than spot price, okay? But with this one too, I look at the futures market. All right, and gold divided by silver is, let's see, gold underperformed silver by 1%. So for last week, I guess we were right. Silver did outperform gold, even though they're both down a tiny bit. It outperformed, it wasn't down quite as much. I think last week it was 90-1. So 90 ounces of silver for 1 ounce of gold. This week it is 88.9 ounces of silver for 1 ounce of gold. Still pretty historically cheap. We do have a death cross here though, so that would imply that silver is going to outperform gold. I'd expect it to do the same next week. All right, and PSLV is down 0.8%. So new guys to the silver space. This is kind of how you start off in the commodity spaces. You buy the commodity itself first, right? And you can do that on the stock market here. You just buy this fund, PSLV, and it's literally a warehouse full of silver bars, and you're buying shares into that, right? Anyways, levels I like right here, $12.40, $11.75, and then $11 for your stink bid, which I probably should up this to like $11.25. But yeah, like those levels a lot. This basically looks like the silver chart, and it should. It should. SIL, this is the Silver Miners ETF. This is down 0.8% for the week, so same thing. I like these lines as entry points, $47.50, $43, and $40. This one also looks like it's kind of forming up a little bit of a bull flag here, right? Just kind of a baby little bull flag. Start off down here, and I go over this in the TA series, is you start off down here. See, look at the histogram right there. Now it's moving to blue, and what we want to see is we want to see this back down into red, and then right there, that's your buy point. So if we get a little bit more consolidation, we'll call, it's not a baby bull flag anymore. This is like a toddler, right? If we get a little bit more action and we see the MACD kind of filter in down here and turn red and then move back up, that could be a nice trade, right? And this fund is big enough to where you could do it with options, all right? SILJ is up 0.9% for the week. Does not look like a bull flag here. See how it's kind of dirty? It doesn't have that nice clean angle, but still a pretty bullish looking chart. We've got the 20, the 50, and the 200 in sequential order. I like a limit order at $14.50, then $13, and then $11.75. Hopefully, silver gets smoked, and at least if it gets down to like $36.50, I think that would be the point where this limit order right here, the $14.50, would get triggered. Roundabouts. All right, and copper, paging Dr. Copper, is up 0.1% for the week. So this is looking great as far as a, look at this, just awesome bear flag right here. Look at that. Just looking like it got smoked. Now, I don't know how likely this is, but if you want to measure this technically to see like where this could potentially go, we measure the pole from the top to the bottom there, drag this back down, and this is saying it could go down to $3. I don't know about that, but it is still pretty exciting. It would be nice to see copper get washed out like that. After talking with Brian, I think that copper stocks are probably a decent deal now. But I don't know that I could Yeah, I hope it gets down to $3. I mean, maybe this is the one that Lobo Tigre has been talking about, waiting for that recession to really hit and do its worst so that copper gets smoked. And I hope he's right. I really do. Um, oh, and next week we have Michael Oliver coming on the show. So be sure to get your questions in. Sign up for the free newsletter, and you can submit your questions through the little link in the newsletter, or go to the community tab here on YouTube, and there will be a post there. COP.U is down 3.7% for the week. So I did another little purchase rate here, right around $7. We call this the 14% arbitrage, and then we'll just run it right back up here and sell at 8 and then sell at 9 and rinse and repeat for as long as this works. Robert is asking, COP.U does not trade on a U.S. stock exchange? WTF? Here it is right here. Blaine, I believe, found this one. Thank you, Blaine. Everyone give him a golf clap. Sierra Papa Hotel Charlie Foxtrot. Say that 10 times fast. So this is a way you could do it over the counter. My brokerage account, for whatever reason, has COP.U, but not this one. And the COP.U, this one's on the Toronto Stock Exchange, but somehow they allow you to, they convert it to American dollars, and I don't understand how it works. I just like to make money. So I buy here and I sell there. But you could do the same thing here. SPHCF, just buy it at 7 and then sell at 8 or higher. Okay. All right. And COPX, the Copper Miners ETF, is up 2% for the week. So I was debating taking profits here. I had a white line drawn just before I pressed record of around here, 47, $48 of like kind of a take profits line. My average cost on this is like 34, $35. And, I mean, it's not terrible. I mean, it's like 30% or so. Yeah, probably a little north of 30%. So what I may do here is sell a little bit of COPX and COPJ. I've been in this for, just buying on dips down here for every time I get a little sell off here, I just buy. And I might be rotating this into some more like alpha companies, some of the ones in the premium portfolio, because I am sure that copper is going to do real well over the next 3 to 5 years. But I'm pretty excited about some of those junior copper companies. I think they could do really, really well. Okay, and COPJ is up to slightly more, up 2.3% for the week. So this one, my average cost, I believe, was around 18 or 19. Let's call it 19 just to be safe. And so this one's up. The other one was up 30%. The junior copper miners are up, we'll round up to 40. And that makes sense. They're junior copper companies, so they're more risk, more reward. But that goes the other way too. If this thing reverses and goes down, they're going to be down more. So that's the risk you take there. But I might be doing the same thing. I might trim this a little bit and start to rotate it into some of the junior companies. All right, and uranium. Now, this chart, I think the spot price is $73. For some reason, the chart got messed up here. I mean, this is on the daily chart, and I can go all the way back to 2007, which shouldn't happen. And it looks like everything looks good until we get to like 2012, and then all of a sudden it fits like 13 years in an inch rate there. I don't know what happened to the chart. Usually when stuff goes awry like this on TradingView, they fix it within a day or two. So I expect next week this will be fixed. But it's showing $81 here on the spot price, but it stops it in September 2024. So that doesn't make any sense. So we can't go by this. But the Sprott Physical Uranium Trust is up 1.8% for the week. And we had I think, typically the way I've been playing this thing for the last like 3 years is whenever the discount gets above 12, I almost buy without even like looking at the chart. Just kind of like close your eyes and press the buy button. Right now it's around 7. They did add another 50,000 pounds. So they're chewing away at the 200 mil that they were going to purchase. And they're up to 68.5 million pounds. So the discount is there. It's not fantastic, but it is there. I like limit orders right here at 1630. Why did I put 32? 1635. $15.10, and then $13.50 as a stink bid. If you have no uranium, I think now is okay. And URNM is up 0.3% for the week. So I talked about taking profits last week, and I finally clicked the sell button. This was a lot less of a technical sell than it was. I was just getting overweight uranium. I really probably bought too much with this little green arrow down here and some of the other like stocks that I bought. And anyways, I just need to take a little bit off the table. It's just, I mean, we're one Fukushima away from just grenading this part of our portfolio. So, you know, you got to, at least I believe you need to understand how risky this is. And, you know, I fully believe that uranium is going to go higher. And this is actually kind of bullish looking here. I mean, it kind of looks like a bull flag. We're just sitting right here on the 50-day moving average. So, you know, if you're not overweight this thing, I don't know that I would sell, but I was. And so, anyway, so I clicked the sell button. All right, URNJ, same kind of thing. Chart looks almost identical, looks kind of like a bull flag here. Sitting right there on the 50-day moving average. We have a golden cross. Technically, it looks pretty good, but same kind of thing. You know, I mean, we bought way down here. You're way up. You know, at some point, you got to pay yourself. And on top of that, I mean, up 75% from the bottoms there. If I'm right about the S&P 500 topping out, uranium follows that really, really closely. And so if the stock market gets hit, these are going to get hit too, no matter how bullish the fundamental argument is. So, you know, if you're sitting on some nice profits like this, doesn't hurt to click the sell button. All right. And oil, WTI is down 0.3% for the week. So played out kind of like we thought, came back up here to the to this trend line, got rejected, went through the 200-day moving average, and is coming back down. Now, as far as initial support, I see a decent amount of support right here around $60, and then kind of a range of support right here for like the next yellow line. You guys aren't going to be buying straight up oil, but this just kind of gives you an idea of when you should probably be buying the equities, the oil equities, right? Then kind of a range of support around 58 to 55. Looks like it's got quite a bit of support to me. Now, according to Rick Rule, this is the break-even cost of oil companies around the planet, $60. So once we get below that, now you start getting into good deals, right? Okay. XLE is up 0.7% for the week. So hit the 50-day moving average right there, got rejected. That's a pretty bearish looking bar. Had a limit order hit right here around 84.50 on, when was that, Monday? Yeah, on Monday last week. So hit right there. Next one I got in at 81.50 and then 79.25 for the stink bid, but this definitely looks like it's going lower next week. That is called a topping tail, right? So it shoots up and then comes right back down. So basically opens low, goes up and goes nope, and then comes right back down. And if we go out to the 30-minute here, you can see it almost follows it perfectly up and then right back down. Okay, and natural gas is down 2.4% for the week. So this white line right here was $3. That got eaten up and broken. Next support is going to be around $2.75. And the natural gas ETF, Foxtrot Charlie Golf, is up 0.5% for the week. I think now is okay for a limit order. I got it at $22.75. After that, $21.75, and then $20.50. We also have the New Orleans Investment Conference coming up. I'm really excited about that. It's going to be November 2nd through 5th. So these conferences are my favorite because I get to meet you guys in person. You know, it's really cool to meet the people behind the screen names. You know, I feel like we have a relationship like online through a screen name. And then when I see you in person, it's like, oh, that's Hagen. Okay. So these conferences are a lot of fun for me. I love meeting you guys there. It's really cool. And also this is where we get a lot of the companies, you know, that we can bet on, you know, in the premium portfolio. So what I like to do personally when I go to these conferences is I like to show up early, and most of them start at like 8 a.m., right? You know, show up there and walk the room. See what companies are there and see what representatives are already sitting at their table. And then when the conference is over for the day, typically around 6 or 7 at night, 11, 12 hours later, walk the room again and see which companies and which representatives are still sitting at their booths. And if you consistently see that there are, companies there that show up late and leave early, is that the kind of work ethic that you want to bet on? And that is not something that you can get when you're looking over their website or their balance sheet. You just don't get that. When you see their work ethic at these conferences, I mean, that tells you right there whether it is a green light or not. When I walk by their booth, I don't want them grabbing my shirt, but I do want them to not be playing a game on their phone. And I want them to make eye contact and maybe try to talk to me about their company. If they're really that stoked on it, they should want to do nothing more than talk about their company. So love these conferences. There's going to be a link down below to the New Orleans Investment Conference. If you can't make it in person, there's the live stream option. It's an affiliate link, so if you use that link, it won't cost you any extra, and the show will get a little kickback. So I appreciate you doing that. I really hope to see you guys there. It's a lot of fun. All right, and what are we on to now? Coal. Thermal coal is down 5.1%. So it looks like it's playing out like Matt Warder said. Looks like we're starting to get a little rollover here. Thermal coal is down 0.8% for the week. I'm sorry, met coal is down 0.8% for the week. So he basically said if you want to take profits in any coal equities, now might be the time. I'm not selling this ETF right now, COAL, but I would like to get a little bit more. Looks like we're coming up right here on a golden cross. So we've got the 50-day moving average moving, it's going to cross above the 200-day moving average. And ironically, that's around where we have our first limit order right here at 19 bucks. I think it'll get there. This is pretty bearish looking like it's probably going to come in for a double bottom. And basically all a double bottom is, you guys that have taken the TA course, you recognize this right away. If the price action goes up like this and comes back down and right here, so it would line up right across right there, that would be a double bottom. And that's the point you buy. You want to find a bar that looks like that red one right there to buy it. And this would be a double top. So this would be an interesting place to run a put, buy a put. Although you wouldn't be able to do that with this coal ETF. All right, and platinum is up 0.3% for the week, so it seems to be obeying this 50-day moving average. Kind of a bearish looking chart though. Looks like it might be forming out a bit of a bear flag. And PPLT made another purchase in this one right here. I went over this as a flash update with our premium subscribers, and basically I'm getting out of Palladium. Palladium's down 1.9% for the week. So this one's looking pretty bearish. I'm not going to be following Palladium anymore. I went over an update with that in the premium version and watched the episode with Ed Stirk last week, and all we did was talk about PGMs, which was really, really cool. Sold out of SPPP, so won't be covering this one anymore. I'm not opposed to betting on Palladium in the future if something changes fundamentally, but in the meantime, I'm completely uninterested. All right, platinum divided by gold is still historically cheap when we go on a ratio basis. I'll just run this out way longer here, and this is basically my if-then statements for platinum and gold on this ratio chart. You can pause that and read it if you've never seen it. And platinum divided by silver is pretty cheap in comparison. It takes about a kilo of silver to get 1 ounce of platinum, and we can see back in history it's taken as many as 5 kilos to do the same thing. All right, and Wannabe Rockstar 2. I love the screen name. He says, Steve, is it time to invest a little in lithium? Check out the chart. It looks very hated, which Rick Rule likes. Sprott has a lithium miner ETF. I bought a little with some of the big profits I made from Gold Royalty Corporation. Awesome. Love hearing you take profits. That is pretty cool. I wasn't able, if anyone knows, like, what is the lithium chart here on TradingView? I couldn't find one that lasted longer than a year. Let me know. Put it in the notes below, please, in the comments below if you find one or you know what it is. Okay, so this is what I was able to pull up. Here's December 2022, and it basically just falls out of the sky hated like you're talking about. Here's the LIPT, LITP ETF that was started by Sprott a couple of years ago. And yeah, this does look pretty hated. Although I did ask, I ask Rick about once every 5 or 6 months about lithium, if we're even like close. And he said no. So kind of my business model here with the show is to basically interview experts in the commodities that we follow. And when they say that we should be focusing on one, then we do just that. Just like we got out of we got out of palladium because a guy that studies this for a living said that platinum should do better. Same thing here with lithium. If Rick says it's not time yet, then I just haven't been keeping track of it. But as soon as he says it is time, then I am in and I will start looking for lithium plays. Hope that helps, Wannabe Rockstar. I hope this works out for you. Okay, where are we? Bloomberg. The Bloomberg is up 0.1% for the week. So kind of looking like a little bit of a bear flag here. Let me draw this so you guys can see it. Boom, right there, and something like that. Kind of a bearish pattern. Although we do have a little breakthrough right here on the RSI. See how the purple's moving above the 14 moving average right there on the RSI. And it looks like the MACD is just starting to angle up. So we might have a little bit of an uptick here. We'll see if it gets rejected by this kind of pseudo resistance line right here or not. But I think it's a decent time to get the Bloomberg, if that's what you want. I know in a lot of your guys' retirement accounts, you're kind of forced into buying some limited stuff like that, and that could be one way you could play commodities. All right, and nickel futures is down 0.7% for the week, so still just sticking around, just hanging around that 15,000 per ton mark. And NIKL, our favorite nickel miners ETF, which is the only one that I'm aware of, is up 0.1% for the week. So I moved these lines up a little bit. First limit order, $11.50, then $10.75, and then $9.50. I like those for limit orders. I guess if you're cheap, you could get it here on the 50-day moving average, but I think we're probably going to get down to that first limit order at least. And the PIC ETF is up 1.2% for the week. So shot up. And I would personally wait for the double bottom here. Maybe it'll get stopped up right here at the 50-day moving average before it moves back up. It looks to me like this is moving down. When we have, you guys can, looking like the RSI is making lower highs, same with the price action. I think it's likely that this is probably going to keep moving down. So that's why I put the first limit order right there at $38 because that would line up for a pretty nice little double bottom. Sometimes the way these double bottoms work is instead of being perfectly across like this, what they'll do is it'll take like a angle like that. And so maybe by the time it gets to the double bottom, you've actually come down here. That's fine. I'm just doing these lines as, ballpark, don't take it for gospel that it's $33. If it's around there and you want this, then just buy it, right? Okay. And closing out with Bitcoin is down 1.5% for the week. So this went up further. I thought last week it would move up to around this yellow line right here, which is at 121,500, and it blew through that and got all the way up to 124,500, and then corrected right back down, settled right here on the 20-day moving average, looking like, it's funny, this just moves so violently. Like literally before I pushed record, I was like, okay, yeah, this is probably going down and probably going to hit the 50-day moving average here and then 38.2. And then now that, half an hour of price action has happened, I'm like, maybe it's going to hold there. Man, I don't know. I'm recording on Friday here and you guys are going to watch this on Sunday. I think it's more likely going to move up now than it is down. The next level of resistance will be that same one, 121.5. Support is going to be right here at 117. And the next level of support down here is going to be at 112, 113,000. Alrighty, well, I hope you guys got something out of that. I love doing this. I would, if you want to play a little bit more alpha, then check out our premium service. You get a whole nother video just like this with company-specific charts, real-time updates of what I'm personally buying and selling. We have a few more spots at the introductory price, so would love to have you, and thank you for all who have signed up. Thank you for being here. Go to stevebartonmoney.com for more, and have a wonderful day.